And as it turns out, Canada is an amazing place to build data centers because of our climate, because of our education levels, because of our economy. It kind of makes sense for them to double down on AI here because they've got a huge client base in Canada, may as well serve them with technology.
So Microsoft is putting big bucks into Canadian AI.
$19 billion over 5 years, $7.5 billion in the next 2 years. And we are doing it to not just serve the people of Canada, but to protect this nation's digital sovereignty.
Previous 2 months. The report comes after recent signals from the economy delivered a mixed message. While exports showed strength thanks to energy, business and consumer spending was weak in November.
Not a factory, not a production line, but Microsoft has just left the American economic orbit. While Washington was preoccupied with tariff disputes and endless rounds of investigations, Canada quietly swept America's most valuable tech corporation toward its side with a simple strategy: stability, smart incentives, and data sovereignty guarantees. And now, Microsoft's more than $19 billion investment in AI and digital infrastructure in Canada is not just a diversion, it's a wake-up call that America's technological advantage may be slipping across the border right before their eyes. For more than a decade, analysts have treated North American tech geography as a settled hierarchy. Silicon Valley at the apex, Seattle and Austin as gravitational nodes, and Canada as a polite, adjunct, talented, yes, but ultimately downstream from American decision-making. That hierarchy has now begun to tilt. Microsoft's multi-billion-dollar relocation of critical AI and cloud infrastructure to Canada, quietly justified under the language of long-term certainty, is not merely a corporate expansion decision. It is a strategic redirection that exposes deeper structural shifts in North America's political economy. And it is a reminder of something uncomfortable. Predictability has become a geopolitical asset, and Washington is no longer the continent's sole supplier. The story begins with small signals, barely noticed by the political class, still confident in America's regulatory inertia. Over the past 3 years, the U.S. has moved from being the world's most stable technology jurisdiction to one of its most volatile. Executive-driven tariffs, ad hoc industrial policy, uncertain immigration rules, and a policy environment shaped increasingly by electoral oscillation have created what investors privately call policy whiplash. In Washington, this may feel like tactical flexibility, but to boardrooms managing multi-billion-dollar AI clusters built on 20-year depreciation cycles, it is a structural risk. Canada, by contrast, has spent the same period consolidating an unglamorous but strategically potent advantage: stability. Ottawa has not always been bold, nor always fast. But it has been predictable, a trait that in the current geopolitical climate functions as a premium rather than a discount. The government's long-horizon investment incentives, its talent-friendly visa system, its quiet diplomacy with Europe and the Indo-Pacific, and its regulatory consistency have collectively created the continent's most bankable environment for frontier tech infrastructure. This, more than subsidies or tax credits, explains why Microsoft's shift feels like a hinge moment. The company did not merely announce new data centers. It repositioned mission-critical workloads, AI training clusters, cloud redundancy systems, and cross-border cybersecurity nodes north of the 49th parallel. Behind the scenes, executives reportedly described the move as part of a broader supply chain re-architecture of digital infrastructure across the transatlantic bloc. In other words, Canada is no longer a branch office. It is becoming an anchor. But to view this as a simple business win for Canada would miss the deeper pattern. The shift reflects an emerging continental divergence. The United States is drifting toward policy improvisation, while Canada is moving deliberately toward a long-game industrial posture designed to capture the era of AI-driven growth. Ottawa's industrial strategy, once dismissed as incremental, now looks like a slow-burn repositioning. Critical minerals, EV supply chains, port expansions, long-term power contracts, and AI research ecosystems are being aligned into what officials privately term a sovereign capacity upgrade. This is not Canada rejecting the U.S. It is Canada preparing for a world in which the U.S. can no longer guarantee policy continuity. For investors, the implications are subtle but profound. When a company like Microsoft begins offshoring resilience, functions, redundant data sovereignty, green power-secured AI clusters, high-skill workforce development, this signals a recalibration of trust. Not ideological trust, but operational trust. The belief that a jurisdiction will not shift course unpredictably when political winds change. And here lies the quiet warning beneath the surface. When firms optimize for predictability rather than scale, the old industrial hierarchy begins to crack. What happens when the continent's most strategically essential technologies now rely on infrastructure outside the U.S. mainland? What does it mean when Canada, long treated as America's economic shadow, starts acting and being treated as a sovereign hub rather than an appendage? The answer is not obvious, and it is not immediate. But the early indicators, capital reallocation, talent flows, governance language, and cross-border redundancy planning are already pointing toward a continental landscape that looks markedly different from the one policymakers assume still exists. So the question is this. If Microsoft is only the first major player to realign its strategic infrastructure northward, what happens when the second and third decide that predictability, not proximity, is the true currency of the AI era? To understand Microsoft's pivot in full, one must look beyond the balance sheets and toward the architecture of Canada's emerging strategic doctrine. Contrary to popular belief, Ottawa did not stumble into this moment. Over the last 5 years, Canada has been assembling in pieces, often overlooked, a new form of national competitiveness suited for an era defined by geopolitical volatility and technological concentration. The first component of that architecture is Canada's increasingly explicit pursuit of policy predictability as a national brand. While Washington oscillates between industrial nationalism and deregulatory impulses depending on the electoral tide, Canada has constructed a regulatory environment that behaves less like a political arena and more like a long-horizon planning institution. Its permitting reforms, energy frameworks, and digital governance policies do not aim for ideological purity. They aim for operational foresight. This makes Canada uniquely legible to global capital at a time when legibility is scarce. The second component is Canada's deliberate insertion into the transatlantic technology bloc, a coalition that is quietly crystallizing around shared standards on AI, data, cybersecurity, and supply chain resilience. Ottawa's deepening ties with the EU on digital regulation, its alignment with Indo-Pacific partners on critical minerals, and its strategic interdependencies with Japan and South Korea have collectively positioned Canada at a crossroads of multiple regulatory ecosystems. In an era where market access hinges on interoperability rather than size alone, this networked neutrality gives Canada bargaining power disproportionate to its population. But perhaps the most understated pillar of Canada's ascent is its approach to industrial hierarchy restructuring. Instead of attempting to compete with the United States head-on, a contest Canada would almost certainly lose, Ottawa has focused on building out the layers of the value chain where the U.S. is increasingly fragile, asterisk reliable clean energy, asterisk undersea cable redundancy, asterisk minerals security, asterisk immigration-driven AI talent, asterisk and data sovereign cloud zones. The goal is not to become a substitute for the U.S., but a stabilizing counterweight, a jurisdiction where the transatlantic bloc can anchor essential infrastructure insulated from America's political pendulum. This is precisely why Microsoft's investment is emblematic rather than anomalous. For years, multinational firms treated Canada as a site for incremental operations, R&D outposts, secondary data centers, or back-office engineering hubs. But the shift we are now observing is structural. Canada is capturing the resilience layer of North American infrastructure. And the resilience layer is where power accumulates in an era of cascading systemic risks. If this sounds abstract, consider the implications. When financial markets seek safety during volatility, they allocate to treasuries. When supply chains seek certainty, they relocate to politically stable geographies. In the same way, when the digital economy seeks long-term sovereign reliability, it increasingly gravitates toward Canada. The U.S. remains the world's innovation engine, but innovation without structural confidence becomes strategically brittle. Investors sense this brittleness. So do policymakers in Brussels, Tokyo, and Canberra. And Microsoft's pivot suggests that corporate strategists, those accustomed to reading signals before they become headlines, believe the brittleness is no longer cyclical but systemic. Yet there is a deeper psychological shift underway, subtler than any policy document. For decades, Canada has operated under the gravitational pull of American exceptionalism. But as the geopolitical climate fractures and the AI economy centralizes power in a handful of stable jurisdictions, that gravitational field is weakening. The once unthinkable question, could Canada outrank the U.S. in sectors where stability outruns scale? No longer appears far-fetched. This does not imply a reversal of relative national power. But it does signal a new equilibrium, one where Canada is not merely reacting to American turbulence, but actively preparing for a world in which the U.S. may no longer serve as the anchor of continental certainty. And so, beneath the diplomatic cordiality and cross-border interdependence, the strategic tension begins to surface. If Canada is constructing a future-proofed architecture of resilience and the U.S. is increasingly governed by volatility, what happens to the continental balance when resilience, not size, not speed, becomes the decisive variable? To analyze Microsoft's pivot without confronting America's internal fractures would be intellectually dishonest. For all its innovative capacity, the United States has entered a phase in which policy volatility has surpassed technological prowess as the defining variable of national competitiveness. The erosion is not sudden, it is cumulative, a slow drift toward unpredictability that global markets have measured more clearly than American policymakers themselves. The first fracture lies in the weaponization of trade policy. What once functioned as a calibrated geopolitical instrument has devolved into a tool of domestic political signaling. Tariffs are now deployed as if they were press releases, shaped less by long-term national strategy and more by the immediacy of electoral incentives. This inconsistency has become corrosive. Supply chains cannot operate on 4-year clocks, and data infrastructure cannot withstand the volatility of leader-dependent economic doctrine. The tweet-to-tariff cycle that began in the late 2010 seconds has become institutionalized, transforming corporate planning into a form of political weather forecasting. The second fracture is America's increasingly unstable regulatory time horizon. From AI governance to immigration policy, the United States oscillates between contradictory regimes. When one administration tightens export controls, another expands the green card system. When one deregulates AI, the next imposes sweeping oversight. What was once a robust bipartisan consensus globalization, talent attraction, industrial cooperation has fragmented into a contested ideological battlefield. This discontinuity is not merely inconvenient. It creates a structural discount on American policymaking. Investors no longer assume continuity, and continuity is the currency of AI-era capital formation. The third fracture is the politicization of institutions previously considered sacrosanct. Agencies responsible for economic stability, scientific research, and regulatory enforcement have become entangled in the broader culture war. The result is an erosion of the institutional firewall that once protected long-term national interests from short-term political turbulence. The United States is still capable of technological brilliance, but brilliance loses its strategic value when institutions cannot guarantee implementation integrity over time. These fractures compound into what economists increasingly refer to as an uncertainty premium, a structural tax levied on firms operating in volatile jurisdictions. Unlike traditional taxes, this premium is invisible but measurable. Higher capital costs, slower investment cycles, and the migration of long-term infrastructure to safer geographies. Canada did not lure Microsoft away from the United States. America pushed it there. Consider the timing. Microsoft's Canadian expansion aligns precisely with the next escalation window of U.S. tariff policy. This is not coincidence, it is risk mitigation. In energy markets, we call this anticipatory hedging. In geopolitics, we call it strategic decoupling. The quiet truth is that America's largest corporations have begun hedging against their own government, not out of ideology, but out of operational necessity. Another overlooked vulnerability is the talent migration inflection point. For decades, America's innovation edge depended on its ability to attract global talent at unparalleled scale. But visa unpredictability, social polarization, and immigration politicization have undermined what was once the country's most reliable comparative advantage. Canada, meanwhile, has converted immigration into a competitive industrial tool. streamlined pathways, talent-targeted visa categories, and university ecosystems that mirror elite American institutions without the political turbulence. This shift has created what analysts now refer to as the North American talent imbalance. Silicon Valley may still be the symbolic heart of global innovation, but Canada is increasingly becoming the circulatory system, quiet, essential, and expanding. And so we return to Microsoft. Their decision was not a verdict on America's technological capacity. It was a verdict on America's predictability. And in the AI era, predictability is strategic power. The real question now, and it is the question few in Washington are willing to confront, is this. If volatility becomes a permanent feature of American governance, how long before companies begin designing North American operations without assuming the U.S. as the default anchor? The deeper significance of Microsoft's pivot does not lie in the investment figure itself, but in the continental realignment it quietly activates. For the first time in the modern economic relationship between the United States and Canada, the hierarchy is showing signs of inversion, not in absolute power, but in where stability, long-term planning, and regulatory coherence now reside. In the previous era, Canada functioned as the adjacent beneficiary, a dependable extension of the U.S. market, absorbing capital flows and talent overflow generated by America's extraordinary gravitational pull. But this dynamic has subtly shifted. As Washington becomes more inward-looking and tactically reactive, Ottawa has adopted the opposite posture, outward-oriented, coalition-focused, and strategically long-range. This is why Canada's position within what analysts increasingly call the transatlantic competence zone has become central. Unlike the United States, whose alliances oscillate with electoral cycles, Canada has woven itself into a multi-layered network of trade agreements, digital standards accords, semiconductor initiatives, and critical minerals compacts. These agreements do not merely diversify partners, they institutionalize predictability at a time when predictability is becoming the world's scarcest commodity. The effect is cumulative. Asterisk Canada now sits at the intersection of EU digital norms, Indo-Pacific supply chain restructuring, and North American energy security frameworks. Asterisk, it offers access to American-scale markets without American-scale political volatility. Asterisk, it is becoming a geopolitical safe zone embedded inside a high-risk continental environment. For multinational firms navigating unstable global conditions, this is not just attractive, it is strategically rational. Meanwhile, the United States faces a structural dilemma. Its economic mass remains unparalleled, but its political volatility increasingly dilutes the functional value of that mass. In a world defined by 20-year AI infrastructure commitments, the decisive variable is no longer GDP. It is policy half-life. This is the unspoken reality behind Microsoft's shift. Canada's half-life is measured in decades. America's increasingly in news cycles. The consequences of this divergence are beginning to surface. Canadian cities Toronto, Montreal, Vancouver are rapidly integrating into global expansion roadmaps, not as peripheral outposts, but as essential operational anchors. Talent pipelines are being rebuilt around Canadian immigration reliability. Fund flows are quietly recalibrating towards stable jurisdictions capable of hosting frontier-scale AI clusters. To put it bluntly, Canada is no longer a fallback option. It is becoming the continental hedge. Washington's strategic community senses the shift but struggles to articulate it. Corporate America sees the shift but is hesitant to acknowledge it publicly. Meanwhile, Canada, the quiet architect, continues to build, which leads us to the emerging tension beneath the surface. If Canada becomes the infrastructural bedrock of North America, while the U.S. remains the innovation engine, what happens when the engine begins to rely on the bedrock more than the bedrock relies on the engine? As the dust settles around Microsoft's announcement, a deeper truth begins to surface, one that most political analysts have yet to fully grasp. This is not merely a corporate relocation. It is the first visible signal of a continental recalibration that has been quietly unfolding beneath the surface of North American economic life. For decades, observers treated Canada as an extension of the U.S. system, stable, friendly, integrated, but ultimately secondary. Yet Canada used precisely that perception to build something more durable, an ecosystem engineered not for speed, but for continuity. And continuity in the AI era has become a form of strategic power that rivals scale itself. What makes Microsoft's pivot so consequential is not that Canada won an investment, but that the United States lost the presumption of inevitability. The assumption that innovation, talent, and capital would always default southward is cracking. Corporations, investors, and even academic institutions are beginning to model alternative futures, futures where the anchor of North American certainty is no longer found in Washington, but in Ottawa, Toronto, and Vancouver. Consider the implications if this shift accelerates. Asterisk AI clusters may begin to consolidate around jurisdictions with low regulatory turbulence. Asterisk talent may follow immigration pathways, not historical prestige. Asterisk supply chains may reorganize around resilience rather than geographic dominance. Asterisk digital governance standards may emerge from consortiums that prioritize cohesion over political spectacle. Each of these trends alone would be manageable. Together, they represent a structural reordering, a reshaping of the continental industrial hierarchy that could redefine power for an entire generation. And yet, the most important dimension is psychological. Global corporations are developing a new reflex. Do not assume America will remain stable. This shift in mindset, subtle, quiet, incremental, is the real inflection point. Once confidence erodes, restoring it becomes exponentially harder. Markets can price risk. Institutions cannot rebuild trust overnight. Canada, for its part, appears to understand the magnitude of this moment. Its policymakers are behaving as though this is a rare opening in history, an opportunity to position the country as the predictability core of the transatlantic bloc, not by outspending Washington, not by outcompeting Silicon Valley, but by offering what the U.S. currently cannot: strategic calm. But moments like these are fragile. A single misstep, a policy overreach, a misaligned energy transition, a breakdown in immigration capacity can erode the very advantage Canada is now cultivating. The margin between reliable sanctuary and overextended aspirant is thin. That is why the warning embedded within Microsoft's decision should not be ignored. It is a signal that the continent is entering a new phase one in which the balance between volatility and stability will determine where ideas, money, and people choose to anchor themselves. And so the question that now hangs over North America is not rhetorical, nor is it comfortable. If the gravitational center of certainty continues drifting northward, will the United States adjust its trajectory, or will it wake up one day to find that the future of its own innovation ecosystem has already crossed the border?